So what is fundamental analysis? Well, as always, you can read the definition first. Fundamental analysis is basically researching or analyzing the company on the basis of information that may help to identify the true valuation of the company. And actually, fundamental analysis basically consists of two types of data. The first one is quantitative data and the other one is qualitative data. And both types of information are really useful, as no one is better than the other one, because both are required in order to truly identify the true value of the company. So first, let me explain a bit about the qualitative part, and then I'll go through the what is quantitative part. So qualitative factors of a company are those that cannot be expressed in terms of quantitative data, or basically you can say numbers. So these are the ones which you can understand, and in analyzing these factors, you can use your own judgment and analytical skills, sometimes intuition also. But in the end, these are all about one's ability to judge or how you can analyze, rather than hard science or rather than considering it as a pure maths. Now, these are the aspects of the company that are difficult to put into numbers. And some qualitative factors that are quite useful in calculating the value of a business is management, business model, corporate governance, competitive advantage or moats, industry evaluation and growth, market positioning, and various other factors. I mean, there are tons of factors, but I have listed the most important ones. So this is the type of data which you just can't quantify, but nevertheless they are really important, as they helps to determine as to whether the company management is competent or not, and what are its competitive advantages, and also does the company have any unique business model or not, and similar other things. So although this information is hard to find because you have to search a lot and dig deep to really get the information you want, and also interpreting these information is a bit complex task, but they are really useful to identify a true value of the company if you combine them with the quantitative factors and then analyze the stock. So this was all about the qualitative factors. Now comes the quantitative factors. Now, this type of information is easily available, as these are basically nothing but financial statements of a company, such as balance sheet, income statement, cash flow statement, and annual reports. And analyzing them is not rocket science or it's really hard. It's not that. But you need to know what are these and how to interpret them, because you don't just go on these numbers published in these statements, as there are a lot of companies who try to manipulate these figures by picturing a false position of the company. But once you get to know these statements, they are really useful, because then you can just know which company is growing at what rate, and you will be able to analyze the financial statements and know how much the company is worth based on numbers. In a nutshell, you'll know how much a company is worth quantitatively. So both qualitative and quantitative factors are really important for analyzing a company's true value. But analyzing these factors are a bit hard, because not everyone is able to interpret the information in the same way. And some information is hard to find, and some just don't know how to truly calculate. So although these information are a bit difficult and complex, but once you get them in your head, rewards are more than the hard work you will put in. Now, I have discussed what qualitative and quantitative factors are, but what's the use of them? Well, you may be saying to determine whether the company is a good investment or not, and you're right, that's what the information is used for. But how can you say that the information you analyze tells you that the company is a good investment or a bad one? what exact thing tells you that after analyzing or researching or digging your head into all the information, then you will know that this is a great investment or not? Well, if you don't know, then let me just tell you that what is that exact thing. Actually, fundamental analysis is based on the concept of intrinsic value. Okay, remember I told you in my previous tutorial that every company has a certain value. Well, this is the value I was talking about. So intrinsic value is basically the price that the company deserves to be bought at. I mean, suppose a company has an intrinsic value of $100 per share and it has 1 million shares outstanding. Then the true value of the company should be $100 million. It means that the company is actually worth $100 million after analyzing the qualitative and the quantitative factors of the company, irrespective of the market cap of the company or the price at which the company's share is trading at. So fundamental analysis' main objective is to identify a true value of the company or the intrinsic value, which will help the investor to pay the right price for the company and profit from it. So let me give you an example of all what I have explained. So let's say an investor wants to invest in a company, but he doesn't know how much the company's true value is. So he doesn't know whether the company is undervalued or overvalued, and he doesn't want to pay a higher price than what the company is actually worth. So in order to find the true value, he goes through all the fundamentals, which are basically financial statements, and he understands the business model, its products, management, market positioning, and so on and so forth. So finally, he comes to a conclusion that the company's actual value is $250. That is the intrinsic value. And the market price or share price of the company is at $100. So it's a real bargain for him because the company is significantly undervalued in the market. So the thing is, fundamental analysis says that in the long run, and the range of long run can be from 3 years to indefinitely. So it says that in the long run, the price of the security will be equal to its true value. That is, its intrinsic value. So if the investor purchases the stock, then it has an upside of 150%. As the intrinsic value is $250, but the share price is only $100. So one day it will be $250, hence making the investor profit of 150%. And also one more thing is, even after researching, analyzing the company and determining the true value or the intrinsic value of the company, it may be wrong, because in my previous tutorial I told you that value of something, or in financial context, value of a company is different for every person. So while one person thinks that a value is $100 for a company whose share price is trading at $150, while the other may think that the company's value is $200. So one may argue that the company is undervalued, while the other may say that the company is overvalued, and both may have used the same information. Because just like we humans have different opinions on the same thing, similarly company's intrinsic value changes from person to person. And that is why there's only one Warren Buffett. Because analyzing a company is not that hard, but determining the true value is. Because that's where most of the people are wrong. And that's a short tutorial on fundamental analysis. And if you have any doubts about this tutorial, then please ask me in the discussion forums.